Hello everyone, welcome to another weekly market review. It's the 25th of January 2021. The market's been moving really well. Hope you bought the dip because altcoins are moving to the promised land. Total market cap on the weekly, we've had that breakout and potential retest, couple of weeks of consolidation. Look at it on the 4 hour. You can see that there is potentially a double bottom structure that's building out, and essentially altcoins, since they've been outperforming, have broken up from this structure, at least the ones with strength. But for BTC right now, it has still been a bit of sideways, and that consolidation is yet to resolve. So for now, I would say that we need to watch out for the break and the retest of this double bottom structure for confirmation. Until then, we can have a slightly longer range and potential sideways consolidation. What catches my eye is this equal lows, and if we are to still find some kind of weakness and structure out, we could take another dive before moving back up again. So that is a potential possibility to keep an eye out for. Altcoin market cap on the weekly, you can see we fought with this major resistance level for a while, but price has just been so strong. We closed last week below, above it, and last week again price did make another push down lower, but did eventually end up closing above it. The next weekly resistance level is still another 18 18% away, with the all-time high still another 31% away. So even after total market cap making new highs and retesting the previous highs, you can see altcoin market cap still has some way to go. In terms of how it's been looking, it has been very violent, but it's essentially just winding up for what could potentially be a very bullish looking consolidation, because you can see when the consolidation is flat, price is doing something different, and market sentiment is in line with that as well. But now, after we made this impulse out of the December consolidation, you can see how violent the consolidations have been. So you have a 30% drop, and right after that, without any significant retrace, you have a 45% move. Then you have another 20% drop, and without any significant retrace, it is retracing that entire move. So prices getting very violent, the dips are getting bought up very quickly. So all I can say is that I hope you're positioned correctly for this market to do what it potentially can. In terms of what the altcoins are doing, DeFi has been the true driving force for these moves, and currently Ethereum already has made its all-time high and gotten back there again. So it is so essential that we are taking a close look at these ecosystems, and we're taking a close look at all the smaller components of potential ecosystems that could eventually burst out, which includes the NFTs, which includes the smaller dexes and ecosystems like Solana, which have a lot of projects building under it, the Dot ecosystem, which has a lot of projects building under it, because these are the places where the big gains are going to be, guys. So you need to be paying attention. If you're not in the Discord, I think you should get there. Soon I'll be sharing another list of projects that I have been taking a look at. Odds against BTC, first we're looking at the DeFi index. I spoke about this in the last review. So this is making a very clean market structure and a very clean market cycle. Last week I told you this is potentially a very, very important place for where this index gets to. Because if it is that we are following an entire market cycle, then it is very potentially possible that we have had the anger bounce and we're getting ready for the depression, repricing, and eventually another longer consolidation before the breakout. So if that is so, then we could get longer consolidation, and eventually this ratio would start to drop again. And there's two things that could make this drop. I mentioned this last time. Just either BTC starts to drop as well, or it is that BTC moves for another impulse and alt BTC has another long drawn correction while BTC reprices itself. So I think this is a very, very key level. I think it's a nice level to be taking profits in this ratio, in the odd BTC ratio, and watching for structure, because if we do build a structure and the flag is slightly more bullish and we break up from here, you know, then it is a different game plan. But if it is so that this is the top, then it's definitely a nice place to take off some risk and look for the rebalancing of this ratio. BTC is still structuring itself out after the 30% correction that we've had. Currently, what we've done is we've swept the lows from the initial dive down, and then we have broken up and retested it. If it is so that we are to continue from here, I would expect that we start breaking up from this channel and finding support above here. This daily level is key for me. But if it is that we do have to revisit the lows again, should break the channel mid again and come back down, take this level and reconsolidate. But for now, considering the kind of demand we do have, it is possible that this 27,000 level does get revisited. Anything lower, I mean, we would need more than just price to do that. I suggest that it should be some kind of fundamental aspects that can trigger such a move. There's a few on-chain metrics that suggest there is still selling interest at these levels. When BTC was at 36K levels, there was a big deposit on Bitstamp that has again risen this exchange inflows mean to above the safe zone. So I think that as long as there is such selling interest, it is possible that price could continue to consolidate and build out and soak in all this new supply that is coming in. If you look at the exchange outflows, you can see that since price did top out, this is again the outflow mean, and you can see that it's currently right on the floor. What we would want to see is that buying interest should translate into something, a spike into at least this 10 level for the outflow mean, because that would suggest that yes, we are ready to really take out all the coins in this range and move further. But for now, it's a very subdued interest in the outflows of the exchanges. Apart from this, what I can also see is that the miners have started to deposit and miners have started to sell. There was big exchange deposits from a couple of Chinese mining pools, which was in correlation to that big Bitstamp deposit. And you can see all the way since November and October, this is a very big outflow from the miner wallets. So I think as long as we have this kind of supply coming in and not enough demand to meet that, we could be ranging or perhaps even take another step lower. 2020 was a special year and it broke most molds of seasonality. But we need to see if 2021 is something that can bring back what is seasonal to the traditional markets. And in terms of that, for the S&P 500, you can see after the end of January and early to mid Feb, we have a seasonal weakness in the S&P 500. So this is something that we need to look out for. And also this is mostly when a new president is in office, but also the tech sector has a seasonality which I would share right after that. So this is something to keep in mind for the coming couple of weeks. Here's technology in relative strength to the S&P 500. And again over here you can see Jan, Feb, March and April. This is from the 20-year average. Tech does end up going into a consolidation before breaking up, and essentially end of April and May is when the stronger trend begins. So Let's see if this is again a seasonality pattern that the market is able to respect, and it is something to keep in mind when building your strategy. In terms of the market, you know that our narrative of emerging market strength and small caps that we have been looking at over the last couple of months it's continuing to perform. But in terms of the tech sector and the Nasdaq, you can see that the market breadth is still improving, and it is still proving to be very, very strong, and is still reflective of a major market bottom reversal. So this is something to also keep in mind, and essentially the next dip, whichever dip it comes, that is going to be buyable. And I suspect that there's a lot of algorithms and a lot of funds waiting to get a risk adjusted position into this market as well. And it has been a long wait, close to 10 months. So let's see if it is possible that after this strong initial breadth thrust, we're able to find a place where big money can come in again and start to manage their risk. Looking at the dollar, and essentially this is what we were looking at when the RSI was extremely sold off, and we were looking for that divergence in the dollar and eventually a reaction from that divergence. But for now, the prevailing weakness in this market, no matter how oversold it has been, and no matter how unidirectional the sentiment on this has been, it continues to reflect that weakness. And essentially, if we look at the July and September consolidation for the dollar, because that is when it was still weak, and all we did get is a couple of months, 3 or 4 months of sideways before continuation. And in that sideways, we did get a couple of thrusts, and this was the time when the risk on assets did end up taking a bit of a hit. So, if we are building a similar kind of structure, what we did get is the initial thrust down, the maximum push for the RSI. Then we started to get a divergence on very low momentum, and then eventually we did get one big short squeeze up before continuing downwards. So we had this initial momentum thrust down, we've gotten the divergence, and currently we are building some kind of a structure. And if it is that we do get that one thrust for a short squeeze up before the move down, that could be in line with that seasonality for January and February for traditional markets. And it is something that we will have to keep a lookout for crypto as well. So essentially this 42K top, I think we need to be cautious considering the kind of inflows and outflows we are getting. And essentially, whoever is doing that is also keeping such a thing in mind, that there is potential for the market to make this move. Whether it is so or not, that we have to see. And for that, if we think about Bitcoin, we have to find support close to 39 to 40K. And that's when we can see and confirm. It doesn't need to be a fake out, because that is also a possibility that price can grind up there, make another fake out, and be building out a longer consolidation. But until then, this is something to keep a lookout for, that we've built the initial divergence, and if price is doing something similar to this structure, you can know that there was at least one short squeeze before we got the eventual move down. So this is something to watch out for on the dollar. I think it is significant and still very much the driving narrative for what is happening in the market right now.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!